Start. All right, good everyone. Thanks for coming back again for another fun week of AGI. Again, our disclosure. Won't read it, but yep. What we're doing this week, we're going to be doing indicators and the VP models. VP standing for volume profiling. It's something that whenever I say volume, a lot of people think, well, that's just stupid. Why would we want to trade on volume? But the way we're going to be doing it is a little bit different to some of the methods that you guys might have heard of or might understand. It's a very useful set of models, and I use them in everyday trading. So what is an indicator? An indicator is actually a pretty simple concept or an idea. It's pretty much anything that is programmed onto an asset that helps you give a summarization of actually what's going on. So you can get indicators that do something as simple as a moving average, where it takes into consideration X data and just divides it by X again. Or you can get something a bit more like an RSI, so relative strength index, which measures momentum, or you can get something even more complex as something like the super trend and parabolic SAR, which we're going to get into today. They aim to make trading easy, although there's a lot of indicators out there that are not so intuitive or don't work as well. We're going to be going through essentially what makes a good indicator. And it is impossible to learn all of them. If you try, you will be going through the index page for years. There's too many. Myself, off the top of my head, I reckon I know about 30. Mohammed, probably around the same. You reckon you know about 30? Yeah. You don't need to know that many. It's just good to kind of pick some, stick to them, learn to them, and then try and integrate them into your strategy. So, our thoughts on indicators. I think Mohammed and I have pretty much the same idea about indicators. We don't use them. Why do we teach you something that we don't use? It's because if you are to come across them in the future and you go, wow, this is amazing, why haven't I been taught this before? You might get too hooked on them. Indicators tend to fail a lot. 95% of indicators are useless. One of the oldest indicators, which is the RSI or stochastic RSI, measures overbought and overpriced areas, but just in the indicator's code, it is flawed. One of the biggest flaws is that it takes into consideration 14 periods worth of data. Now, if you were to imagine that one of those periods had an exponential gain or drop or an abnormality, that would obviously affect the reading because it's such a short period. You can extend them to make it more reliable. However, in most situations, indicators are quite useless.
We're referring to the default indicators, the ones that are built in. There's not every indicator in the world.
And there's also one other aspect, indicators are lagged. What do I mean by lagged? It means that they're delayed in their response to reflect the actual data. So let's say the AUD USD is currently trading at $1.30, whatever. It won't be, but let's just say that it's trading at $1.30. An indicator such as the RSI, which measures its overpriced and oversold, will actually show potentially up to an hour delay in that reaction. What this can essentially do for you can give you false positives and false negatives. Can also sway your judgment if you're just sticking to one particular indicator. Do you have anything else to add on that?
Some indicators also can repaint. So by repainting, we basically mean that if you, let's say you have an indicator that works off of signals. By signals, we mean it tells you where to buy, where to sell. What some people do is they'll have an indicator up on the board. Up in the actual indicator system that people have developed, because you can actually make your own indicators. So Jacob mentioned at the start of the AGI that I'm an algorithm trader. Okay, I am. So I trade based off the indicators I make. So the reason we don't use the standard indicators in the system is because they're shit. Okay, they literally lag. It's just straightforward that. And some indicators repaint. So this means that if you get a signal, so if it tells you to buy at a certain point, you might buy the signal. 3 hours later, this very signal that came will disappear. Does that make sense? It was a false buy. Okay, so these things are basically referred to as repainting signals. We'll go over these later anyway into more detail to show you how to determine if an indicator is repainting or not. There's actually a little trick you could use. And basically that's it. Yeah, so that's our thoughts on indicators. I'll go through the basics now. So the main 4 indicators that you'll first be introduced to as traders is the first one, RSI, which stands for the Relative Strength Index. The second one is the MACD, which stands for Moving Average Convergence Divergence. The third one is stochastics. The fourth one is moving averages. I don't like the first 3. Okay, I don't use them. Some traders like to use them. Okay, some amateur traders that like with the first beginning, they could be good used as a guide. Moving averages are my personal favorite. Okay, so the problem is that though with all 4 of these indicators, if you guys want to write this down, they all lag. Okay, all of them. So what it does is by this word lag, we mean it looks at historical data. So example, if we're say looking at a 30-day period moving average, okay? So this basically means that the moving average is looking at the closing price for the last 30 days. Okay, so if you have a candlestick, right, you look at the last 30 days, wherever the price closed, the average is all up, all 30 days, and then he basically draws it in the form of a line. Does that make sense? And this is the moving average. Now, what's the problem with this? It's looking at the last 30 days. It doesn't depict what's going to happen in the future. So therefore, it lags. Okay, same concept with RSI, MACD, and etc. What's the next slide, by the way? What do you have up there? Alright, so yeah, we'll start with RSI anyway. So I'm not going to explain all of this. Okay, I'm not going to explain the math behind it. Okay, it's too complicated to understand. I'm going to explain it in the simplest terms possible. So the relative strength index, it measures strength. Okay, so strength and momentum of a currency pair, depending in the direction that it's going to move. So these things, what?
Nothing. I'm just looking at you. Just go. Keep
All right, so these things, they suck in a trending market because in a trending market, let's say it's telling you that it's an overbought market. That's standard because when the market's trending in the up direction, of course, there's going to be an overbought condition. Okay, that's why the price is pushing upwards. So therefore, it tends to fail. Sometimes they work very good in a consolidating market, and we'll show you later on in the charts how well they work. But me personally, I like to use the RSI at first when I first started trading. If you guys want to use it, go for gold. After a while, when you guys become more fixated on technical analysis and price action trading, these things become second nature to you anyway. So RSI, basically, it's got a threshold. And should I bring up TradingView now, or we'll bring it up later?
I've got a screenshot.
Oh, you got it. All right, beautiful. Bring up the screenshot for him anyway. I'll show him what it looks like. So this is the RSI. Okay, this is what's going to look like on the trading charts. Okay, you're going to have a line, which this is actually referred to as the relative strength index. Okay, it's in the form of a moving average. It basically plots the strength at which the current price is represented at. Over towards the right here, these numbers, this is referred to as the threshold levels. Okay, so you want to note the threshold level 30 and 70. The concept to this indicator, the way it works is when the price, so when this line, okay, is above the 70 zone, this is referred to as an overbought condition. This is where we want to be looking at doing what? Selling, because it means there's too many buyers. And if you go look if you actually go all the way up there, okay, so in conjunction with that, what happened? Price ended up selling off. Okay, when it became overbought here at this point in time, okay, so if you move your mouse up, okay, price went up slightly. Okay, now here's the problem with this. It doesn't always go in your favor. These indicators, they work maybe 30-40% of the time. Okay, and I've back tested these. So the word back test, by the way, for the new guys here, the word back test means you take a strategy or an indicator and you test, you simulate real trades that had actually occurred according to what your instructions in the past. And obviously the more that you get that win, most likely means that this strategy or this technique you use is highly profitable. Okay. We'll get into more detail with that later on when we're doing the strategy section, like in a couple of weeks, not now. As an example, over here, we also could have taken another buying position since it was an oversold point. Okay, price tended to reverse slightly. Okay, now it doesn't always reverse. That's the thing I want to try to show you. This point in time here, it reversed. Okay, this point here, it came down. This point here, it reversed. This point here, it reversed. So far, it looks so good, right? It's winning. Every single one of these trades won. That's not always the case. Believe me, it's not always the case. And this is actually on the 10-minute time frame. So this is short term. Okay, so there's a lot of noise in the market. What ends up happening is when you get these news events that occur, or when the market starts to trend, because right now you can clearly see that's consolidating. Okay, look at the net movement. You literally started and almost finished in the same place. Okay, it's consolidating. So if you go on, say, the 1 hour or the 4 hour time frame, this is just going to be one big candlestick that would look like a doji candlestick. So it's consolidating. That's why I said that these tend to work best when it's consolidating. When it's trending, God be with you. If you don't believe in God, may whoever you believe in God be with you. So that's basically the RSI. That's the concept of RSI. Any questions on relative strength index? No?
Okay, so just one thing I also want to point out is this little piece of information down here. What this 55.9944 number means, that is the level that the RSI is currently at. So if you can't tell by using your eyes here, you can just have a look there and it'll tell you exactly what level it's at. Close, this word close means that it's taking into consideration closed data. So you can change that to be on open, highs or lows. It's up to you. Usually it is closed because that's where the candlestick has finished moving. And 14. What that means is it's taking into consideration the last 14 data points. So set to 10 minutes, it's taking the last 140 minutes worth of data. You can change that up, you can make that 100, you can make that 200, you can make it 3 if you really wanted to, but that's a bit stupid.
Yeah, so basically it just looks at the last 14 candlesticks. That's
Yeah,
literally the
so-
simplest way to put it.
Very basic, very easy indicator to use.
We usually don't play around with the settings though. Okay, I wouldn't advise anyone change these settings. If you're going to use this indicator, just leave it to default. The reason don't play around with it is because if you fixate this indicator to be very long term, say if you change this to the 28-day in terms of the RSI, and you sell on the 10-minute time frame, it's going to be way too long term for you. Okay, so you're not really trading in conjunction with the time frame, so you don't want to do this. Okay, just leave it default. Like I said, these things work very well sometimes in a consolidated market. Without consolidation, they work shit. Okay. And basically that's an RSI. What's up? What's the next one? Okay, so MACD. So moving average convergence, divergence. Okay. Now how to explain this to you? Is there actually an example? It's better if I just explain it because I don't want to explain the math to it. All right. So this is what the MACD looks like. Okay, it looks difficult at first. I know it looks like shit. When I first looked at this, I've got a headache. Okay. These red, I'll start with the bars. So these red and green bars, you see this referred to as a histogram. Okay. And what's a histogram do? Just what's the definition of a histogram? What's a histogram do? No one knows what a histogram is? We're all uni students. Great work, guys. Great work. So a histogram plots data. Just plots data based off information that it's gathering. Okay, so in this case, it's plotting how many sellers are in the market at this point in time. And these blue arrows here, these blue bars, they're also plotting in how many buyers are valid in the market at that point in time. Okay. Now, my concern is not the histogram. I don't care about the histogram, okay, because I don't care how many buyers there are in comparison to the sellers. If I wanted, I could just use a volume indicator, which is shit. In this case, my concern is the moving averages and this threshold line. See this line here of 0? That's my concern. Now, this indicator, there's 2 types of moving averages in it. Okay, there's a fast moving average and the slow moving average. In this case, the slow moving average is the orange line. I could just tell by looking at it because I don't even know what the colors are in this case. But the way I can tell is because this line is very, very smooth. See how it's very smooth? And then look at the blue line. It's very, very aggressive, right? Now, you don't need to know which is the slow, which is the fast. You can literally search that up on the settings. Just click on the settings tab. It'll tell you fast, slow, and it'll have the color coordination next to it. So you'll know by yourself. But the concept to this is when both the lines are below the 0 market, okay, so below the 0 threshold, so you see the 0 line, when the lines are beneath it, doesn't matter if they're crossed over here or not, when they're beneath it, it means that it's now in a downtrend, okay, so the market's going down. So in this case, the lines here were all beneath it, right? Was it trending down though? Was the price moving down? Yes, so it was trending down. Now, where do I get my signal to enter? The crossover, okay, so basically in this point in time here, it said that when the blue, so when the fast moving average, which is set to, in this case, to 12 days, okay, crosses above the 26-day, this here is a buy signal. Okay, so it's telling you now, buy in a downtrend. Do we want to buy in a downtrend? No, you don't want to be buying in a downtrend. Why? Because you don't know how far it's going to go. And look, okay, if you actually bought relative to that, you would have only made like 6 pips. We'll talk about pips later on, so in this case, I'm going to talk percentage, around 0.01%, which is nothing, okay? So this market, not a valid signal, okay, in that case. What about in this point in time here? We had a sell signal there. See the cross? You can't really see because the histogram. But basically the blue crossed underneath the yellow. Would we have sold this? Yeah, this is a sell market. And look, the price dropped as we wanted it. Okay, so basically this is now how we use the moving average convergence divergence in our case. Now there are more advanced things I don't want to get into, which is such as the actual divergence and the convergence factor with both the RSI, stochastics, and even the MACD. Don't want to get into these because I personally don't like using them. Okay, they're not really profitable. They're not very successful. So, and basically,
so the idea behind convergence. Oh, there's one right there. So this is divergence. This is an example of divergence. Divergence essentially means when the RSI doesn't match up to what the data is saying. So let's say the RSI goes from a low to a high, but the data is going from a high to a low. That there would be divergence. Essentially, it's showing that there's a weakening in the trend. In this situation, we've gone from a low to a high. It's very slight. That actually doesn't match up at all. That's actually really good. That's correct. Sorry, just 1 second. That there would be an example. This one right here. So here we've gone from a high to a low, and we've gone from a low to a high. What does that mean? It means that the uptrend is weakening and it should turn around into a downtrend. Does everyone understand that? So whenever it looks like the RSI isn't reflecting the data, it means that the current trend is looking like it's going to reverse, it's going to change, it's going to flip. To show another one, maybe these two. So here, I'll just show my computer as well. So did I say here? So here and here. So at this point we've gone from low to high, and this point we've gone from high to low. What does that show? It shows that the trend for upward momentum is pretty much it's fiddling away.
It's diverging
and
away.
we're going to get a downward trend. That there is one of the more advanced ways to use the RSI. Look for fails in the actual indicator, and then you take those fails and apply it to the graph. They don't occur often, so it's one of the big issues with using the RSI. If you have an indicator that doesn't show you signals often enough, why do you have it on? You can just use price action. So there's an example of a way that's a bit more complicated to use the RSI. Does everyone understand that? Check the silence, yes.
Hey, they're very quiet today. You guys had a long weekend or something. I need the party spirit in you all. Cindy, you're on party mode, aren't you? You're in party mode? Need some party spirit. Alright, so yeah, we'll go next slide. Stochastics. Okay, stochastics is very similar to the RSI. In this case, you're not measuring strength only, you're measuring strength and momentum. There isn't much of a difference. Okay, it's the same thing. I actually don't like this at all. Okay, I prefer the RSI over this. If I was to use this as a noob trader, I would like to use the word noob a lot. Yes, I play COD. So in this case, I don't like using stochastics. It's basically the same concept. Is there an example for stochastics?
Yep.
I just want to show them it.
I'll just have to pull it up.
Oh, you don't have it up? Oh, okay.
I must have used the wrong.
By the way, to bring up indicators, show them actually how to bring it up. Show them how to bring up an indicator.
So if you're on TradingView, you can just indicators right there. And then you search in here which one you want. This is the library.
So these are all the default ones. These are the ones that we say they're shit. Okay, we just don't like using them mainly.
They're the default ones, and then there's ones that other people have made as well. So the stochastics, there's heaps of different stochastics ones, but the ones we're after is this one.
All right, so basically this is the stochastic indicator. Zoom in a bit so I can just show them what's going on.
Huh?
Just zoom in a bit on it. Oh, that's it. So same concept. All right, we have our threshold level on the left, on the right, sorry. Yep. Yeah, that's fine. So we have our threshold on the right. In this case, we're looking at the zone 20 and 80, okay, and not 30 and 70 anymore. So this is the threshold levels. It's the same concept, okay, when the price is above the stochastics in the reading. So in this point here, we want to be looking at doing what? Selling. So anything above 80 in this case is a overbought market. Anything beneath 20 is an oversold market. So basically, we want to be looking at selling here. We want to be looking at buying when it's under this level, okay? That's the first thing. That's the first thing we look for. Second thing we look for is what's the market doing? In this case, the market is doing what? Consolidating. Is it making high highs or high lows? Is it making lower lows or low highs? No. Okay, if I plot a level of support here and resistance at the top, it's valid. Okay, it's consolidating. So in that case,
Did you just stop the recording?
no, it was my phone. I got a notification.
Oh, okay. Keep going then.
Yeah. So when it's above the 80 zone, so when it's overbought, what you want to then look for is a crossover with the moving averages. Same concept, we have our fast and our slow moving average. In this case, the fast moving average would be the blue line. The slow moving average would be the orange line, because I can clearly see that the blue line is very aggressive. Okay, in this case, the blue crossed beneath the orange. There's our sell signal at the top, and we sell all the way down. There's our profit. Okay, does this make sense so far? Now, what happened here? Did it work here? If we sold here? Didn't work, even though we had crosses. Why didn't it work? Because now it's made high highs. It's trending. See, it formed an uptrend. It broke past that previous level of resistance. We're going on to make high highs and high lows. So that's why it does not work in a trending market all the time. Okay. Same concept down here. Did it work at this point in time here? Did it work here? Slightly. Would you agree? Slightly. We had the crossover. We had a buy signal. Went up to the previous level of resistance, and then it dropped back down. But at this point in time here, this is where it failed. All through this level here. Okay. We had a big spike due to a news event. Okay. But beside that point, if it wasn't for the news event, we would have gone nowhere. It's trending down. Okay. So you can clearly see indicators don't always work. Okay. They don't always work. When do these things work profitably? When you actually make your own indicators. And when you start changing around with these values, you start playing around with them, you adjust them. But to do this, you got to be a programmer. Okay, you have to have significant knowledge in PineScript code and Python language as well. So this is basically how I like to trade. I make my own scripts. Okay, I don't like to use the default indicators. I basically make my scripts based off price action trading, which is just technical analysis. but just put into code. So it just saves me the time and the hassle from having to do all the work myself. That's the only difference.
Just bring up an example.
Oh, that's an old one. You still have that? Jesus.
Yeah.
So this basically is a slight example, okay, of what an indicator could look like. So this one that I actually made myself gives you a buy, okay, it tells you where the entry is, and when price hits the entry, you buy it all the way up to the next sell signal, you take your profit. Okay, so this is basically how I did it. This is one of my old ones. I don't use this anymore. It's actually very, very old. Jeez, I can't believe you still have this.
Yeah.
I made this like well over a year ago. Sorry? So I don't use this because my strategy has been updated. So it's different. I didn't actually give this out to anyone. This wasn't distributed. So this one's myself. Jacob has it only. So the indicators I recently have developed are a bit more advanced than this. Okay, I don't like to rely on old data only because this was set to a strategy I used to use, had a significant success rate, but now the strategies I use now, they're much more approved, much more reliable, so I have to disregard these strategies, so I don't use them anymore. Do you want to show them the most recent one?
I was actually just going to bring up your...
Not this one. No, not this one. The one I recently gave you. So just to give you a hint, not that one, dude. You just pulled up the same one. Yeah.
Sorry.
There you go. So this is the most recent one I've been working on.
What's your overview for the USD CAD? What do you want settings to be? That's 3?
No, 7D. 7D. Dude, I've memorized them, dude. I made the fucking thing. 7D and 19. And on the, 20. The 20, yeah. So bring up the strategy tester. So basically, what the fuck are you doing? Bro, that's on the left, select Insight X Trader. No, on the left. Yes, select the other one. So there you go. So basically, that's what an indicator could look like. Okay, so bring that down a bit. It's too it's covering the charts. All right, so basically, this is what a strategy tester looks like. Bring it up a bit. Bring the curve in. I already explained I may as well just explain. I may explain the strategy tester. All right, fucking get it right, dude. All right. So basically, the way this works, this is actually implemented into TradingView. So this is called the strategy tester. So the amazing thing is what TradingView does is if you have an indicator that you develop, rather than you having to manually backtest it yourself or test every single trade, because it will take months and months and months and months and months and months worth of work. What it does is it automatically does it for you. So it would buy and it would sell at points that you would tell the indicator to do so. Okay, so in this case, there's 89 trades, 93.2% of them won with a profit factor of 8.3. So basically, whatever you lost, you made 8.3 times more than what you lost. Okay, they're more it's more advanced than this. Okay, this is just very basic. Okay, so by advanced we talk about then you have to look at reliability. So you have to look at the time frame you're trading on. If you're doing this on the 1 minute, is it reliable information? No, because you only backtest for the last 6 days. You know what I mean? So I don't care what happened the last 6 days. I want something that happens over the span of say 1 year or 2 years, and that's why we go on high time frames, such as the 20 or the 30-minute time frame. So yeah, these are my algorithms that I do. So basically that's that. What's the next? Is that volume? There you go.
So
Jesus.
I know because it's pretty easy concepts this week. So moving averages. There is an infinite amount of moving averages, but these are the most common ones. You got your simple moving average, which is just what you would have done in class normal. So sum up and divide it by the amount of numbers. Exponential, same process, just take the exponential of it. Your whole moving average, probably one of the more useful ones in my personal opinion of the most common. It assigns weightings to each of the data points. So let's say you've got 10 data points, it'll assign a weighting to each single one, and it allows you to get an idea of the actual asset's momentum. And then you've got your smooth moving average, which is like a simple moving average, however, just smooths out the data, not too complicated. They all work pretty much exactly the same. It's just the small, tiny bits about them that differentiate them. So an exponential, if we add an exponential to a price, what do we know? It's going to be more sensitive to change. So let's say we have an exponential moving average. Every time we have a drop or an increase, it's going to be more sensitive than a simple moving average. If we have a whole moving average and there's a small drop, it'll pretty much ignore that. It'll assign a very small weighting to that. And essentially what that allows you to do is it allows you to get a smoother idea of where the trend's actually heading, and it allows you to take into consideration the velocity and momentum behind that actual asset. Now, there are some least common ones, but personally I think they are a lot more useful. The first one being the McKinley's dynamic. McKinley's dynamic is essentially it's just another moving average. However, it takes into consideration a bit more of an aggressive velocity and momentum idea. One of the good things about this is it tends to hug data a lot closer, so you can see when the trend might break, might reverse a lot easier. Then you have the displaced moving average, which is extremely useful for following trends and identifying where a trend might actually start. What that essentially means is, because of how closely it hugs the data, it allows you to identify early breakouts before any of the other moving averages can. Now, one of the big things about using moving averages is that one moving average is borderline useless. You will get a few cuts every now and then. Mohammed, could you just go to just down one? So this is one moving average. The idea behind a moving average is that once the price cuts above it, it's a buy. Once it cuts below, it's a sell. It's a very, very basic concept. However, it is not very informative, as there are massive sections where you're not trading. Now, this is great. You would have gone all the way up there, but just notice it's on the 5-minute time frame as well. I don't know why I did that. I just did. But you would have been up there. But then for this whole section, you're not in the trade. You're still left in the trade. So in this situation, you've just lost money from being up there. So what can we do is we can add 2. Now you'll notice that I do have a moving average of 200 periods. Now you might go, well, that's a bit excessive. Well, not really. The reason I set it to 200 is because if a data point breaks a moving average of 200 days or 200 periods, it's probably going to keep going on an upward trend. If I have it set, say, to an 8-period moving average, it's going to be quite sensitive to movements. Set it to 200, it's going to be quite insensitive to current movements. It's going to take a lot of momentum to actually break that point. So on that, you'll notice here in this particular section, support and resistance. Sorry, resistance here, and in this situation, support. That is another great use of moving averages. Mohammed, could you just go to the next one? This is what happens when you add 2 moving averages. So I have a 100 and a 200. Now, whenever you want to use a moving average, if you're going to use them in the two fashion, the first one needs to be double the second one. So my first one is 100, the second one is 200. Why do we do that? Long term, short term, very simple. The idea here is that any asset that is between the 2 moving averages is in a void period. You don't want to be in there. Usually it's market consolidation. So in this situation here, you wouldn't want to be in. This situation here, you wouldn't want to be in. There, and potentially in this little section there. Why? It's because the market doesn't actually know which way it wants to go. It's stuck between the two averages. Now you'll notice these crosses here, here, there-ish, and there, and also there. What do they mean? That essentially means that the price is going to take a dip or is going to go up quite significantly. How do we know which way it's going to go? It's dropped below both of them. At this point here, we might not want to enter because it could just retest. As soon as we get this cross here, that there would be our signal to enter into a short period. Where would our exit be? As soon as it's broken into that avoid area. So here, at the first cross, short, stay, exit, done. Don't get back into the market until it's gone here. That there would be your next point of confirmation for an entry point. It's crossed, gone up, stayed, there, out. Don't enter, buy, out, buy, out. Sell if you really want to take that risk, but that's up to you. And then here again, does everyone understand how that works? It's a very, very simple concept, but it's one of the more powerful kind of indicators that we're going to be talking about today. Mohammed, do you use moving averages in trades? Yeah, still use them every now and then. One of the great things about them is it kind of helps you identify the average momentum of an asset, which is just something that's always good to know. It helps you identify if a market's, if you think that a market might be consolidating, but you're not too sure, flick one of these on and it'll tell you very, very quickly if it is.
Did you just cut the SMA email?
Yeah, tell them what that is. Yeah.
Okay.
Go to the next slide.
What's next? Parabolic
Yeah, so we have some more advanced indicators that we're going to be talking about. The 2 that we want to talk about and then we want to focus on are the parabolic SAR, which stands for stop and reverse.
Parabolic stop and reverse.
Yeah, and then we've got the super trend, which is was one of Mohammed's favorite indicators for quite a long time, and I think shaped how he turned out to be an indicator for the first year and a half of his trading. So we'll give you a strategy on that that's actually quite profitable as well. Mohammed, do you want to cover them?
All right, so the parabolic SAR, or a PSAR for short. I like calling it PSAR, or sometimes you just see SAR, okay? It's represented by these dots. I'm not going to explain the math behind it. It's too complicated to explain. So you get these dots at the bottom. Now this works well in a trending market, works shit in a consolidating market. Okay, so lucky us now, it's the opposite to an RSI and a stochastic reading. Why do these work and how do they work? Basically, it's literally in the name, stop and reversal. Okay, so it shows you how far an asset will keep going in terms of direction, and then it will stop and reverse. And when it reverses, it'll give you a dot. Basically, if the dots are beneath the candlesticks, see these blue dots? Okay, if they're beneath the candlesticks.
They're purple.
Purple? I see blue. You guys see blue or purple?
See this?
Let's have a debate, bro. Blue? Purple. Oh, black. All right, fuck. We've got 3 different colors. All right. So, basically, when they're beneath the candlesticks, okay, you want to be looking at buying. So if you bought this candlestick here at the close of it, so up here, right? Price broke up, went all the way up. Okay, we stayed all the way in until this happened. See that how we appeared on top of it? Now, when the dots are on top of the candlesticks, you want to be looking at selling. Okay, so that's the difference between the two. However, not all the time. Okay, what happened here? Told you to buy here, right? Because you had this big sudden rush in momentum, this big acceleration. What ended up happening here? Price went down. See what I mean? So it doesn't always work when it's consolidation when it's consolidating in particular. This point in time here, it worked. Okay, went up. This point in time, it worked, went down. This point in time, it failed. This point in time, it failed. This point in time, it failed. Do you see what's going on here? So it doesn't always work. Okay, it works best when it consolidates or when there's a breakout. It works shit when it doesn't. Okay, that's the difference between parabolic SAR. Any questions on that? No? We good? All right.
Indicators are pretty straightforward.
They're very simple. They're just basically tools to assist you in trading. You know, don't rely on using these as, they're not robots. They're not telling you where to buy, where to sell. It's just used as an extra guide. So if you know for yourself, let's say you're trading a market, you know, you're using price action. By the way, the word price action means naked trading. Okay, it doesn't mean that the fucking trade is naked. I literally mean you're trading with no indicators on the screen. So that's what naked trading is.
So what we've been doing now, like using trend lines, support, resistance areas, that kind of stuff.
Yes, so it's just trend lines, support, resistance, things like this. We'll get into Fibonacci theory later on as well. So it's just very, basically no indicators. That's price action trading, okay? But there's no harm in, say, if you're trading at this point in time here, you see a big breakout, if you chuck on the PSAR, if you want to see how far it's going to go or where to get out, there's nothing wrong with doing so, okay? Like I said, it's at your own discretion, depends how you like to trade at the end of the day. Next. All right, super trend. Now, this is not a built-in indicator. This is actually an indicator created by some guy, I can't remember his name, so credit goes to him. I can't remember, Rajneesh or some shit, I don't fucking know, right? So, anyway, basically we have to give credit to the guy, okay, so we wouldn't get sued. So, what's his name? Just search up super trend. Or we are gonna get sued, dude. Now, fuck it, bro, it's non-profit anyway. Anyway, so, basically, it's one of my favorite indicators that I used to use. Sorry?
I don't know why I wasn't looking to pull it up. That's weird.
It doesn't matter, man. It's a sign from God. Anyway, so basically, it identifies many things. Okay, so it identifies dynamic support resistance regions. It identifies potential reversals, and it also identifies potential exits. Okay, so this was actually my favorite indicator for the first 2 years of my trading. The time I stopped using is when I started making my own sort of moving averages, but we'll get into more detail on that later. So basically, we recommend using a period of 2 in terms of the setting. You'll see exactly what I'm talking about. You don't always have to use 2. You could use higher, but it becomes more long-term. We'll show you on TradingView itself. I actually developed a strategy, basically the 2 super trend theory, basically where you grab 2 super trends, you throw on Heikin Ashi candlesticks, and bam. We'll go into detail with this later on. Okay, it's not relevant just yet. Profitable, it's very profitable. Okay, I'm not going to say it's not. The only problem with these things is what do all majority of indicators do? Lag. Okay, that's the only problem. So you're not always going to get it very accurate. When do indicators not lag, by the way? So when do indicators begin to lead? Nope. If it's looking at what? Not current. I'm looking for something else. Price action. When you actually basically code an indicator to draw out dynamic levels of support resistance for you, where it's not looking at closing data, it's looking at what's happening at the current time with support resistance levels and in terms of momentum as well. So this is when indicators begin to lead. So that's what my focus was this year. My goal was, you know what, I want to build algorithms that do not lag, that do not repaint. I want to build them based off these whole ideas and analogies, support resistance and trend theories and etc. just to make them more easier for myself. Basically, we'll show them what a super trend looks like. So there is a bit of color coordination in this as well. Okay. So basically, the way it works is, this is the 2-1, I'll show them just a single.
Oh, I didn't get one.
Oh, sorry, just go on training view or something. If it lets you do it.
No, I'll just close it.
Yeah, just bring it back up, I guess. How we all finding today's lesson? Yeah, thumbs up. Yeah, fingers up to me, no? No fingers up? No one doesn't like me? All right, sweet. They all like me, Jacob. Fuck you. Except you, huh? Dude, it's only 12:30.
Huh?
Still early, man.
Yeah, I know.
Jeez, we covered this quickly. All right, so super trend. And the one I like to use is, wait a second. All right, there you go. Yeah, you have to write the whole word. Okay, the one with 2,000 likes, 2,330.
No, that's not the
Oh, 2,500.
Doesn't it have 8,000 likes?
Yeah, it had like 8,000, I actually remember. That's it, there you go. So this is it.
Why didn't it come up there?
Capital S, case sensitive.
Oh, is it?
Yeah, I don't know why they do that, but it's case sensitive.
So the indicator's not up. Just go to your favorites, it was in there.
Yeah, I just want to bring it up.
It's not coming up.
Coming up.
That's weird.
Alright, anyway, that's what it's called.
So that's basically the name of the indicator we use. Okay, go for the one created by Medjaya Lucas. Okay, that's basically the name of TradingView. Like you trust me, I've seen some weird fucking names, and I've seen like Raptor 67, and I've seen some weird names like Donkey Kong and all this shit. Anyways,
One's called Mr. Boot Cannon.
basically, like
He's one of the top trending guys on the website, actually.
yeah, there's Chris Moody as well.
Yeah, Chris Moody.
There's a lot of weird names that you'll discover a lot of weird things on TradingView, to be honest. So basically the concept is this. This is the good old super trend indicator, okay? I used to refer to this as the holy indicator of trading. Now that I look back, it's not really the holy indicator of trading, okay, lags. Basically, when the line turns green, see this line, it's represented by a line, okay? This is not a moving average, okay? So not to confuse people, it's not a moving average. I don't know what the fuck it is. I actually don't know what concept they used to code this in. So basically the concept is when the price has been above the line, this line first turns green, okay, it's a buy signal, okay? So at this point in time, it's saying that the price, see this big candlestick? Okay, previously it was in a downtrend, right? So the way to explain this is, this super trend does not depict when it's trending or consolidating. It doesn't do that, okay? However, it depicts where there's a reversal that could potentially occur, okay? So not to mind. So in this point in time here, the candlestick closed above the line, the super trend, okay? So therefore, that's my first indication it's a buy, and the line turned green. So if I bought that here, we would have made some profit. Surely, okay, we would have made some profit. Okay, if we came back down here, we would have still closed with net profit. Okay, so this was quite a successful trade. The trade that came after it, okay, we still made some profit. It dropped. See how we had this sell signal? Okay, price fell beneath it, still dropped, okay? If you wanted to scalp the market, of course, because here's the thing, you don't know how far trades tend to go, okay, in terms of profit. This case, it's fucking shit. Okay, so it was buy, went up slightly, came back down. Okay, so if you were a greedy trader, yeah, you're fucked. So this case, same concept, went down slightly, but overall, what can you see here? What's the super trend telling you? What's the market doing? It's consolidating, okay? So you can clearly see it's consolidating. Now it starts to trend. Can you show me when it starts? Oh, yeah, go before.
I'm going to go back.
Oh, there's a live data, that's why. All right, so here's a perfect example of when it's trending. You can see the profits are quite insane. Okay, so basically your sell signal came all the way back up there on that little candlestick. That's one to the right of it. Yep, there. So that's where your sell signal came through. Okay, how do we know it's a sell? Okay, it told us it's beneath the super trend and it's red on the super trend color as well. Time to sell. You sold it. You be patient. You made a shit ton of profit all the way down. Okay, if you held your profits. The problem is you don't know how far these things are going to go. You don't know. That's the problem with these indicators is, like I said, it doesn't depict when it begins to trend or consolidate. It depicts where there's a potential reversal. It's up to you to figure out whether it's consolidating or not. That's the problem with this indicator. So what I did was show them the two super trend method. Oh, by the way, you can change the period on this, the settings. So if you click the settings, okay, so inputs, you basically set factor of 1 or 2. Okay, that's up to you. Lucas, how are you?
Yeah, good, how are you?
Yeah, not too bad, man.
One PD5, and then the next one is factor 2 PD10.
That's right. So this was basically one of the first strategies. Oh, by the way, hide the arrows. So click on the settings for each one.
No, I've done it on the first one.
Oh, okay, so just these arrows are just entry points. Okay, they're just quite annoying. I don't like them. So basically, this was actually, if you guys want to write this down somewhere, you can you can. This was one of the first strategies I used to use. Okay, 2 years ago, it was very profitable for me. My return was great. Okay, this is where I basically started off with $800, turned it over 50K using this technique. There's only 2 problems with it. The first problem is lags. Second problem is it's not used on standard candlesticks. So you can actually change candlesticks. Now there are different types of candlesticks. There's a candlestick, there's a bar, there's a Heikin Ashi candlestick. So this works on Heikin Ashi, which is the third one. And Heikin Ashi stands for a averaged candlestick. Okay, so basically it takes, I don't understand how the math works to it, but it's something to do with the
last few candlesticks and
yeah,
summarize them.
basically, yeah. So it's just averaging the candlesticks. And the concept to this is when the candlestick closes above the super trend, so at this point in time, you buy your profits all the way up, and it goes all the way up. Okay, when it's between them both, you avoid. That's a period of consolidation. When it's underneath, you sell it, it goes down. Don't ask me how I figured this shit out. I don't fucking know. I'm an engineer. Okay, I'm not a finance student. I just did. Does it work? Yes and no. Okay, it works. Yes and no. So I'll give another example. So sell signal came all the way up there. Okay, right before it, was it in the avoid zone? It was. Okay, so you don't want to be taking a trade. Right after it, it went all the way down in profit. You made around 0.86% on that, which is almost equivalent to 100 pips. That's a very, very good return. But like I said, don't rely on it. Like I said, it's an outdated strategy. I don't like using it no more. There's a reason.
Probably one of the best indicators that we'll show you.
Yeah, so it's basically one of the best to use at first, if you guys are still starting. But at the same time, I wouldn't recommend it. Like I said, there's a reason why I stopped using it. Don't want to say why. But like I said, it's up to you guys. At the end of the day, how you guys choose to trade, I can only show you and give you tips. And basically, that's the 2 super trend theory with the moving averages. What's next?
Does anyone have any questions about the super trend logic?
You have questions? No?
Cool, dang.
Oh, sweet. Jacob, do you want to turn on one light or something?
Turn on a light.
Yeah, like it feels too dark in the room.
No, because then it's going to get glare on the screen.
No, it's alright, the screen is bright.
I don't know how to turn it. Okay, I don't actually know how to turn it.
Oh, I'll turn it on. It's right next to you, bro. See the white button on the left? Just press the first one. That's it, leave it like that, yeah. Alright, that's just a bit better, man. Alright, you guys can still see that, yeah? Yeah, see, I told you, fucking blows the thing. Alright, so basically, that's super trends. Volume, by the way, volume indicators.
A trash.
Fucking shit. Okay, don't use volume. Okay, it's literally how I don't like using it. If you want to use volume, go for it. And basically, Jacob will do volume profiles.
Which is a much better volume indicator. Okay, so much to like what Mohammed said, when people say I trade with volume, they think of this, you know, a little bit of a meme. I know, I'm a comedic genius. Clap, yeah, thank you. Woo-hoo. So VP models stands for volume profiling. There are 2 types of volume indicators. One, 2 types of volume, I guess, schools or way of thinking. The first one is borderline useless, and that is just using the normal volume model, which I didn't click on. Yeah, thank you. So, this is the normal volume model. It is ridiculous. The idea behind it is stupid. What it essentially says is it gives you volume per price. So that's fantastic. At Wednesday, 3 o'clock, 50,000 people bought. Fantastic. What does that tell you? It doesn't tell you anything. Some people have the idea that, oh, if a lot of people buy on this candlestick, it means it's going to be a short on the next. Not necessarily. It doesn't tell you when trends are going to start, doesn't tell you when trends are going to finish, it doesn't give you support or resistance. All it does is it tells you how many people have bought and sold on a particular day. Really, that's useless. We don't need to know that. What we want to know is we want to know where is support and resistance, where is the data trending, and how can we take advantage of that. This is where you get the difference. So the one I just showed you was volume on the x-axis, which takes into consideration volume per time. Then there's volume on the y-axis, or volume per price, which is significantly better. What it tells you is it tells you how many people are buying and selling given a specific price value. So let's say the AUD USD is trading at 0.83. It'll tell you exactly how many people are buying and selling at that period, and it will do it over a different range depending on what you want to set it to. What can that allow you to pretty much find out? It can tell you where the best support and resistance lines are based on investor and trader ideas. So if you're in a particular position and you want to know where it could potentially reverse, just look for the period where the most amount of sellers are for that price, and it will show you exactly where the best resistance line is. Now, there is actually one important thing. You must use Oanda. If you try to use FXCM or any of the other ones, it'll actually come up with an error. Oanda is the only one that provides that data. So it's incredibly important that you use that, or else you will not be able to use the indicator. Can you go to the next slide? Now, let's talk about the features. This red line is the most important line you will see. It is called the POC, point of control. What that means is it means that this line is where the most amount of volume has been traded given that price. Right here. What does this green line mean? Buyers. Red line, sellers. Purple, buyers as well, sellers there. However, there's a big difference between these two areas. This one is called LVT, low volume trading. Essentially, once an asset breaks past this, the concept is that it will just drop. Vice versa, once it breaks through here, it will just continue to rise because there is no one trading in that area. Even though these ones look quite significant, it should still continue to rise. And we see that. It broke up above this last little bit here and then had quite a significant rise. In this situation here, it failed to break through the last area of resistance, last area of support, sorry. If it had broken through that, you would have seen a very nice downtrend. This here allows you to form the best possible support and resistance lines or areas. The point of control can be used as a support or resistance area as well. However, its more important concept comes into when you start to break down the different types of VP models. Does everyone kind of understand that so far? The biggest idea behind volume profiling trading is that you want to trade between key points. So buy, sell, sell, buy. Once you start to get into this area again, that there is when you start to look for a sell. You can use the momentum here to identify where an asset might start to appreciate at a particular rate and where it might start to get resistance. So let's take this particular section here on the right-hand side. We notice that this here is the last point of support before it's going to enter into a continuous downward trend. If we're at this point, hello mate, if we're at this point and we see that it's tested it and it's been quite significant, we would obviously enter into a buy. We're going to enter into a buy. And now have a look at this point here. It's now going into a smaller traded volume area. It's going to break up until it starts to get back to a high volume trade area. Does everyone kind of understand that? Does everyone understand what I just said then? Cool. And then once it reaches that area, it's going to drop again because it's reached into a high volume trading area. You have a lot of people trading it. Most people will be shorting in that situation. It's quite easy for you just to go down and go back down to that last line of support. And that there is how you use that's a basic general idea of how to use a volume profiler. Next slide. Now, there are three types of volume profilers. Each one is used in a very specific situation, and it is important that you don't get them mixed up. If you get them mixed up, you will fuck up. The first one, VPFR, or Volume Profile Fixed Range. Only used in consolidation periods. Why do we use it in consolidation periods? Because it will take into consideration all data points in that consolidation area, whereas the session range and the visible range do not. You can actually customize where you want it to start and where you want it to finish. That way you can identify amazing support and resistance areas in a consolidation market, so you can try to identify that breakout point. The next one, visible range. Visible range is what you saw on the previous slide. It takes into consideration as much data as possible, pretty much all data on the screen, and will give you a very good market overview. It will tell you all the areas where traders have bought, sold, and it will give you a very good point of control for the entire market that you have visible on the screen. Why do we use that one? We want to set it we want to get it to set our basic support and resistance lines. Where is the market going to be moving, given the data that we're currently looking at in the present? And the final one is my favorite. It is session range. Now, session range takes into consideration the volume being traded in that session. So let's say for Tuesday, it will set up a very small version of the VP model that you saw on the previous screen and will allow you to trade excellent positions with breakout ideas, and it will allow you to identify where the market has been trending based on the last few sessions. Next slide, please. So this is the VPFR. As you can see here, this entire section here is a consolidation. What's it telling me? What's it telling me here? It's telling me here, this here is an LVT, low volume trading. No one is trading down here. As soon as it gets down to that area, the asset's just going to drop. What's it telling me up here? If it rises up a bit here, it's just going to keep going. What's it telling me here? This is where most of the data is being traded, which you can quite clearly see. And that red line there is your POC, your point of control. What's happening here is, this here is the last point of resistance. This here is the last point of support. Any given time that it breaks that, the idea is that it will just continue to fall. What do we have here? Resistance, 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 small breaks, but nothing hugely significant. Even if you look at the past ones, you can quite clearly tell that it won't break above that because you have another line up there. Now, how do we use this? Let's say we're at this point here. We don't know that this is going to happen. What position would you intuitively take right here? Obviously a short. You'd obviously take a short. You're at that point of control. You're at the last point of resistance. The idea is that the asset is going to drop. You could quite easily enter into that as a short and just ride it all the way down. How do we know it's going to continue to fall? Because there is no one trading here. That is the idea. It uses volume, it uses investor and trader momentum behind a particular asset to identify where support and resistance areas will be. Does anyone have any questions about this one?
How do you identify when it would go back up again?
That one there, you'd want to. Do you remember how we put on our visible range, the one that gives the full market idea? Once you've pulled that one up, place your support and resistance lines to identify where the market could rebound or could bounce. So if you were to pull up a full one, you would potentially see that there could be a bit of a support range around here. However, we'd have to zoom out and we'd actually have to put on. Also take into consideration, this is on the 5-minute mark. This is on the 5-minute time frame. No, this for some stupid reason, I was doing low time frames when I was making this. I don't know why, but I just was. Yes?
How did you decide that to be your range, like starting from the point you started from?
This here is the start of consolidation. This is the end of consolidation. All of this is consolidation. Reason I wouldn't start back here, that looks like it's trending to me. If I start to include trending data, it's going to start to sway it, and this here, point of control, might actually be somewhere down here, which is incorrect.
So when you say start of consolidation, it doesn't necessarily have to mean it came off that high and then started. It could have come off a low.
Yeah, you could have put it there. You could have put it there. I put it there just because that was the high point, and I wanted it to take into consideration that high point before it started to form its VP model. Does everyone understand that? Brilliant. Next slide, please. This here is the VP VR, or visible profile. I forgot the name of it. So what's going to happen here is this here will give us a general idea about what's going on in the actual market. I've taken into consideration quite a lot of data. Again, make sure you understand that's on the 5-minute time frame. The settings, they won't change. You cannot change how much data this takes into consideration. The only thing that you can change, that 24 and 70, it's actually just the thickness of the actual slide, of the actual rows here. So I would recommend that you do not change them. Now, what this does here, it shows me that this here is going to be support. This here is going to be our general resistance. How often does it say viable? Well, it looks pretty accurate to me. Now, what is this saying? As soon as it's broken down past this point, you're going to get quite an obvious short point. Now, you might be looking at this and going, well, there's a bit of a concern. Just compare them. There's still quite a bit of distance between the two. So there's no need for you to be concerned if you do see one that's purple but still quite large. However, if you wanted to, you could just wait for it to pass past that one and then just enter into a short quite easily. At that point there, you got quite a successful retrace down. Unfortunately, at this point here, you would not enter into a buy. You wouldn't even enter into the market. The reason is because this data here wouldn't be formed yet if you're at this position. You'd probably just have to wait for it to get back up to here. And then you could re-enter into a buy up until the top there, because that's where the last resistance is going to be. Take notice of this point of control area though here, however. If you notice, resistance, resistance. Bit of sideways movement because it hasn't been able to break through it completely. Then back into a short down to our support level. Does everyone understand that? Is there any questions about that one? Cool. So these are just two of the models that's really, really easy to do quick trading. Helpful for identifying support and resistance lines. It's one of my favorite things. Next one. This one is by far my favorite though. Session volume. Now, the day that you're on is useless. Do not even bother looking at the day that you're on. Let's say that this is the day that we're on. Don't even look at today's data. Completely ignore it. What you want to be doing is you want to be looking at the previous day's data. Or you want to be looking at, previous day's data, let's use that. So let's say we're on this particular day here. All of these lines here, even this point of control, won't be developed until this point here. Now, how can we use an indicator that lags up to 1 day? Very easily. We're going to look at the previous day's volume. Now, one of the great things about the session one is that it puts this point of control each day. Notice what happens when the asset breaks above the previous point of control or drops below. You get confirmed buy and short opportunities almost every single time. Now, one of the good things about this is once it's broken there, have a look at what actually happened on that day. Is there much volume being traded? Absolutely not. You'd be more than comfortable with staying into a short for that entire period. Let's look at this situation here. We're here today. It's just broken above yesterday's point of control. Let's have a look. Has there been much volume traded anywhere else? There, but apart from that, absolutely not. So once it gets above that, enter into buy and you have no reason to get out until the end of the day. And just there, you've made quite a significant amount of money. This doesn't work. This works on every asset across every time frame. And it's a very, very simple and easy strategy to implement. Does everyone kind of understand that? Very good. One of the other things that you need to be considerate of is the point of control extension here. I've extended these point of controls to identify where future resistances could be. 3 days ago, if we're on this day here, 3 days ago, we had a point of control here. What does that tell me if we're approaching this particular section here? It tells me that we're going to get an area of resistance. For me, it would be very obvious for me to exit the trade and potentially enter into a short. Why would I enter into a short as well? Because if you go back and look at these sections, the asset has not broken above this period here. Even though it looks like it has quite a lot of volume being traded there, so that there would also back up you to enter into a short. Does everyone kind of understand that? Brilliant. I think that there is it for volume profiling. It's actually a really, really simple indicator, and I thought that would take a lot longer, to be honest. But yeah, does anyone have any questions about any of the models that we showed today, the VP models or just indicators? No, sensational. Okay, we have an hour left, which is unusual. So we'll have a 5 minute and then we'll probably come back and do what we always do. We'll get an asset up, we'll start to throw up what we learned, and we'll try and place some demo trades. If anyone has any questions, just flag me down. Thank you. Fuck, we're killing it with time. It's because it's indicators. They take 5 minutes.
27 slides.
I know.
It's a lot.
It's because they're not really hard concepts. I love it. I'm fucking smashed. I love this, bro. I trade with this so much.
It's getting real juicy, yeah, it's getting juicier. Thanks again for the talk yesterday. It was like an hour and a half. Yeah. Ah, man.
That's true. That's true.
Yeah, no, look, it's interesting, man. It's just fucking easy to use. Yeah. Is this one you found out recently? Or you all did you include it? What was that? Oh, we were talking about something independent we were talking about. You like just thought about it, like, dude, like showing me screenshots of it. Yeah. Let's have a look. Let's have a look. Those
Actually, I want to see how it looks. IG just. You got to call up. The
yeah, that'll come in fifth week. I saw that on the page as well. I still can't understand I'll just show everyone what it is. Did you include the regression? You know you do the regression. Figure out a way. Oh, really? Well, that's figured out a way. It's a spiral. I just don't know how I break the spiral regression because it doesn't follow a straight line. Yeah. I'm like saying, I was just trying to figure out how to do that, but I think there's quite a lot we got about 3 tools in there. That's so good. So we got the can you use this every time you trade now? Yeah. And like you only need to set up yeah. Was the thing spiral? Did you like see that electro sign? Was that yeah, it's like the sign function. Yeah. So it's like, it's stupid. It's so good. Bro, there's the people in the call. The investor dudes we were talking about. You're the investment bank. Oh, Blizzard. No, not that one. The one we were talking about last week over the phone, last Monday. You were like, bro, can you give me a favour? Oh, yeah, no, I didn't. We've been so far. Yeah. Apparently, like management, they don't like really fake apparently, like that's what it is. Yeah, apparently they don't fake before you. So it's actually like cycle. So now you need to get through on it. He's no, that's Ari. Ari's the company. Ari's the company. Ari's the one studying this. Yeah, you can get through all of them. I'm not making it for you. That's the last time it's a common thing with a lot of investment banks. Like apparently the Macquarie Capital is like totally blacklisted Macquarie. Oh yeah, that's so bad. Yeah, I know. They just play they want upper class law, commerce law students from UC. It's so bad. It's like, you know, 99 they're so stuck up. Yeah. It's crazy because even like someone like you, still stuck with that.
I just applied for like I had a connection in the
Sorry, no. The test was flawless. Like we would have lost like one.
Yeah, and then like we sat down with him, the test we did fucking spot on.
Yeah.
And then like I don't even get through. So like
Yeah. I got a follow up email.
I got you design. Bye.
Actually, it's cheap. What about the other one that you did with Israel? How'd that go? Oh, the one you said you did end up putting in. Oh, yeah. Seven day a week slave, working every day. You did that anyway, so that's fine. Let's get weekends off the market. Oh, it's about Lions. I don't know. Is it just for it? Because don't normally supposed to say that. They work like a oh, sounds awesome.
Yeah, I remember
Yeah, because I've never.
It
I thought that was
it's hard to do it. It's not like, there's not a single student you can catch him and be like, hey, let's go grab lunch. Sorry.
I don't know if they are. I kind of would do that.
Honestly, so would I.
It's worth it once you've done it for the right reason.
Yeah,
To get into them, they
Yeah.
exactly.
So do it once.
I'm just going to bring up that Facebook stuff.
Yeah.
I didn't want to start.
Yeah, exactly. You see the ball comments on man. This was it. And I'm pretty sure the guys have to have a connection as well. It's so
What's that?
for IB, it's like you almost have to have a connection inside.
It's fucked.
If you don't, if your WAN isn't pristine, like, and everything else about you is amazing, it's like, don't even bother. You know what I mean?
Like you get a first one.
Oh, you know, you need to
Oh, exactly right.
Alright, Mohammed, do you want to get started again? Yeah.
So what are we doing?
I just want to show them something before we get started, and then we'll do that. We'll do what we normally do. All right, everyone. So we're going to get started again. Just something that I want to show you all. You may have seen this post sometime last week. Hopefully you did. Alex and myself have been working on a bit of an idea around Fibonacci spirals. So he came to me with an idea about using Fibonacci spirals from high to low. It was very good. Pretty much it identified support and resistance lines very well. Over the last week, I've been going back and forth with him, and today we met up for about an hour and a half to talk about where we could get it to. And I just wanted to show you what we finished up with. One should.
I've got a headache. Boss has a headache. What blind man?
So, after a week of discussing and work between us both, this is the model that we have finished with. Now, why do I want to show you this to everyone, even though it looks quite complicated and...
Quiet. Of course it's complicated.
The reason I want to show this is because this is a student that has come up with an idea, he's approached me, we've worked together to try and make it better, and to a degree I think we have. Hopefully, yep. I think we've made it quite significantly better. There's a few things that we've come across that have been quite mental. So yeah, I just wanted to show you this, that starting early does actually help, and feel free to approach us with new ideas, and we can, if we like them, like I liked this idea and ran with it with Alex, and over the last week we've come up with this. We turned something that was as simple as 3 lines into, 2 absolutely massive models that it works very, very well across a long period of time. So if anyone's interested in just getting started on something, I highly recommend that you just start to do research about trading. If you have an idea, feel free to hit Mohammed or myself up.
That's not with this shit. You give me this shit, I'm gonna.
And we can come up with maybe something that's a bit like this or more simpler. But it's up to you how you find it.
Dude, if you're trying to get simpler than that, it's still hard. That's like fucking beyond cold and simple.
All right, so we'll clear all that off. Okay, so we have 50 minutes left. So I guess we'll do what we always do at the end of the class. Give us an asset. Not all at once. EuroCAD. Sure. So what we want to try and do today is, because we've gone through some of the indicators as well, we're going to get you guys to scream out some stuff, well not scream, but lightly speak out some information that you'd like to be placed on the graph. If there is a particular thing that you want to see, such as an RSI or a VP model or a moving average or anything of that nature, let us know while Mohammed and I are discussing about what we think the position will be. And we can put that up and then you guys can kind of form your own idea and begin to start the process on your analysis.
We should bring up indicators.
No, we'll bring the indicators up if they want it. Because then if we're just bringing out, useless information, blah, blah,
Remember
blah.
the 5? They give us 6. So there was RSI, stochastics, MACD. Please don't bring up the MACD. Moving averages, then you have exponential weighted or simple moving averages. There's also the parabolic SAR and super. Don't bring up super trending up, okay? Don't ship the system. No problem. Okay?
No, you can bring it up, like why not?
I'm keeping the system there. Actually, you don't bring up the super
And what was the last one? It was MACD. Okay, there's a list of them on the side if you forget. Mohammed and I are just going to have a quick discussion about what we think it's going to be. If you want to have something up there...
On the P side.
On the P side, right. If you want to have something up there, just yell it out to me and I will put it up there with...
Well, look, pay attention to 3 things when you're using indicators. Pay attention to direction, first of all, if the market's concerned. Like I said, some indicators work best in trending conditions. Some indicators work best in consolidating conditions.
Absolutely.
That's the first thing. Second of all, pay attention to the time frame. If it's very short time frames, a lot of noise. The higher the time frame, less noise. And third and final thing, don't go against the trend. Okay, and have appropriate risk.
Right, so Mohammed and I are going to start a discussion. Break off.
I think we should actually put them in groups. We'll have like a competition, like group A, B, C, D, like all versus each other.
Alright, line 1, line 2, line 3, done.
What the fuck just happened?
Start talking. If you want to have something up on the graph, let us know. If you want to draw a trend or anything, feel free. There's my computer. Don't break it.
Or go through search history.
More dangerous. Even still, the momentum's too big. The momentum is huge. It's very likely to cut through a lot of we've already like harpooned through a support line. That's like a one right through the middle. We've already harpooned.
It might retrace back a little bit because
Yeah, good point. Yeah, we trace back and then I'd say there's a bounce off. Yeah, you're right. Maybe like a short distance.
Is there anything anyone wants to see up on the graph?
Can we get the fib spirals, please?
No.
Who said that? Who said that? Who said that?
Yeah, it's fine.
Are you autistic?
Alright, so does anyone actually want to see anything? Is there an indicator that you want to see? Is there a support line, resistance line, a trend line?
Alright, the VP for the the whole range thing.
Okay, so you want the...
What's it? These ones only on paper?
These one, ooh. You know what? Unfortunately, I do not know the answer to that one because I've only ever had the paid one. I'm not too sure. So if you just want to... Yeah, it's like $15 a month. So if you are trading, it'll be nothing. So there are your two things that you wanted up.
This is for the premium membership also.
Yeah, so it is to have the VP models, you actually have to pay.
Oh, you actually have to remember.
You get a free trial, 30 days.
Yeah, yeah, free trial 30 days. So every 30 days, just make a new account.
Trading properly, $15 fucking like lollipops to you, okay? Fucking trade properly, make money. Quite awesome.
Yeah, like you spend probably $20 on Macca's a week. Like, come on.
It's an investment, man, alright?
All right, so there. Ooh, I can justify this now.
I'm selling.
Nah,
I'm selling.
nah. Or maybe, but
I'm selling to that level of resistance.
Nah. Nah.
Josie, you want to? Teammates want to?
All right, so does anyone else want to say anything different, or is that it? Okay, we'll have sellers on that side, buyers on this side. If you want to leave your team, that's fine, but just try to hang as a group.
So I'm selling. Who's selling to? Yeah. Good work, guys. You guys are gonna win.
All right. So my buyers, my boys.
Alright, so my analysis. Okay, we'll go old school here. We'll do each other's analysis.
Yep. So Mohammed's just going to do his analysis. I'll do mine, and then we'll be gooch.
So my theory is to sell down to this zone of resistance. Clearly you can see, because in the past, price tried to keep testing. The price kept testing this level of resistance, and then eventually we had a big spike to the upside. Okay, so I anticipate that the same sort of occurrence could occur. But that's not enough info for me, is it? Okay, my second piece of info is it's making lower lows and lower highs in a short-term period here. Sorry, in a short period. And basically we're having gigantic sell-offs, which shows me the sellers are in more control than the buyers. Would you agree? For the sellers? Yeah? Okay, you guys on my side. You guys got to back me up, all right? Okay. So now we're going indicators. In this case, okay, that's not indicators. What the fuck just happened?
You just
Okay.
online, dude.
Oh, I see what's happening here. All right, there you go. Because it's a bit different layout to mine. So RSI, okay, it's not in an overbought condition, not in an oversold condition, but I like to see this. Okay, it goes to show me could be come back down and fuck you, bro. I lost what I was gonna say. So yeah, I'm gonna watch what this shit I'm gonna give you when you're doing your analysis. So basically, I could expect a sell-off, okay, and the strength continuation to the downside, and at the same time, there is a lot of divergence. So fuck you, bro. Anyway, no, I'm joking. So basically, that's my concept to that. If I bring up the super trend, which is the last indicator I wanted to bring up, I will try to bring up at least.
You clicked on the wrong thing again.
No, I'm pressing on it, bro. Your computer is slow. There we go. It's currently in a downtrend. I'm expecting. There you go. And it just started downtrend. So you guys are on my team. So you guys can't change. Yeah, that's it.
No, they can change, but you guys can change if you want, of course.
Not easy. Yeah? You guys trust me. Yeah? You guys trust me? No?
All right, so let's get rid of Mohammed's rubbish.
So by the way, sell down to that region.
Yeah, I'll put yours up.
And my stop loss put it on the previous one.
Bang. So
Yeah.
you want yours down there, and where do you want your stop
No,
loss?
not down there. A bit higher. Between that zone. In the middle.
Well, there.
Yeah.
Where do you want your resistance there? Your stop loss there?
Not the previous one.
703 pips. Okay. Sure, Mo. All right. So my analysis. We're going to chuck on these two. Shut the fuck up. Anyway, so my big reason for wanting to buy this is, although yes, there is quite a lot of resistance at this level. If you remember, once a support or resistance level is broken, it becomes.
Could you repeat that? I couldn't hear you.
Go fuck yourself. It becomes the opposite. My other concern for it being a buy is actually the amount of high volume trades that have been taken on the VR, the visible range model. So just based on that and this particular point here as well, I believe that it's going to be a buy, and this will be.
What I feel like we're both gonna get with this shit.
It's probably just going to go
I feel like
sideways.
we're just gonna cop a bad, man.
So I'll put mine there, and I'll put my take profit, I don't know, there-ish or something. Pretty small take profit. Actually, nah. I'll put that. Okay, so there's what I reckon. I think that it's going to be based off the VP VR model. I also think that just because on this point here it broke through quite a significant amount of times, I think there's going to break through again. And just because we've been talking about it, I will throw on a MACD. The one that I'm going to choose to use is going to be McKinley's Dynamic. The reason for using McKinley's Dynamic is because I want to take into consideration the velocity of the asset, and as I can start to see, it's already started to change direction as well. So for those two reasons, I think that it will be a buy. Let's see. Does anyone want to change? Spicy. Hey! Okay, but real talk. Everyone on the buy, it was actually quite obvious to sell. The reason for it as well, yes, it was against the trend. But one of the other big ones was Campstick. It was a massive bearish engulfing. So if you've been able to see that, also you can take into consideration this big week here. There's been too much sell pressure. There's no reason for it to be a buy. If you even look at the back one where I said that the resistance had turned into support, that's bullshit because it hasn't been able to break that. So even though in the previous examples it did act as resistance on those situations, it hasn't turned into a buy, into a support because it hasn't been tested yet. So thank you for that. Cool. Does anyone have another asset?
So what happened to Jacob? Wait, give me 1 second. So what happened to Jacob?
I told you over there was going to sell. I did.
Oh yeah, well, yeah, kind of.
So does anyone have another asset that we want to look at?
Pound Kiwi.
Huh?
Why?
Oh, GP Menu. Oh, no, actually, I like that.
Actually,
Yeah,
That's one of my favorite pairs. It's her favorite pair too. GP
Why?
Menu. No, it's good on the pip side. It's
We
good
never
on
do
the
it. Something new.
good on the pip game. You know? Alright, here we go. GP Menu Zoom. It's a bit of a racist pair, I'll tell you now. Okay? I'm serious, it doesn't like Arabs. I'll tell you that. If you're Arab, it doesn't
like Arabs.
it doesn't like Arabs, it's a racist pair.
Oh, just delete all the shit.
Oh, I don't know what that
And
is.
then just replay that button.
Yeah, that's one. I'll just do that. Just like go there. Alright, so I'm warning you, if you guys are Arab, don't answer this. No, but from the front here. Look it from here. There. Where's the replay tool?
Okay.
Yeah?
Jump to and then just click anyway.
Oh, yeah, I don't know how you set up your trading. It's different.
Then press water.
Okay.
And zoom out a bit. So everyone can see what's going on.
Okay. I'll just move this out of the way. Move this out of the way. Alright, we're all good. What the fuck this is, bro? Excuse me, Sorry, oh fuck, I'm not blind.
Alright, so break off into your groups. You're going to have a quick discussion. If you want anything put up, just yell it out. And
100 MA?
Sorry?
100 MA?
100 what?
100 just from this guy.
You getting divorced or something? Sorry? If it's one of those,
calls me
if
again.
it's one of those taxation stuff, it's gonna get fucked.
Everyone hates tax.
You know how many fuckers?
Nobody hates tax more than me.
I don't know why. I'm not trying to be racist, but it's always the Indians.
Alright, anyway, moving on.
These fucking scammers. I'm serious, man. All these scammers.
Mohammed, this is. Yes, it is recording, so please stop talking. Stop! Alright, so if anyone else wants to have anything else put up, just let me know. If not, Mohammed and I will have a quick discussion.
I don't even know what the fuck this is, to be honest with you. I don't even know what's going on. I don't know. This is.
I'm gonna go for
Can we zoom in and turn it?
Yeah.
Like,
Yeah, show us like the last 3 candles. Please.
Okay.
Please.
So this is the cone candles.
Jacob, you dog, put it on. Alright, so it's clearly in.
that's a good level.
Against the silver? Wait a second. I reckon it's a buy.
But then you're saying because of the small term, the short term, the short term, you're saying is that what you're trying to go for?
I think no, it's a long term buy. Long term. Let me see something.
A support level which?
Just go up and.
Do you want anything else on there?
Yeah, it's lower height, as you said, lower height and lower.
No, I don't know.
Alright. Okay. Anything else you guys want to see up here? Besides Jacob's nudes?
Maybe like one more friend.
Does anyone else want to say anything, or are you alright?
Can we zoom out that are below?
Mohammed, zoom out.
Zoom out? I will happily zoom out. I'm not gonna lie, bro. This looks like
Okay, does everyone kind of have an idea of what they want to do?
I am bringing up.
Mohammed?
Yep.
Okay. Buy, sell.
Oh, okay.
Isn't that what it was before?
That was my.
Oh, sorry, that's buy, that's sell. My bad, I got mixed up. Sorry, that's my bad, sorry.
Where's buy? This is buy. That's buy. It's a sell. I say sell. I say sell. I don't want to take the loss. You take the loss. I don't want the loss. We both take the loss. We go down together.
No.
We think we go down together. There's a buy. Oh no, bro. You can't really. Look at that. It's fucking obvious. I don't know. I'll make it up. I'll try to make it up. I don't know. You're good at making up. I'll make it up. You make it up. Don't worry. Hey, we'll say that you like. If you win, I'll say that you win again. Oh, yeah. I'm on your side.
Alright, has everyone got a decision? You guys, what the fuck are you doing? Then why don't you go to your side? Mohammed. Alright, so Mohammed, are you going to go first? Mohammed?
Yeah, I'm selling.
Yeah, are you going to talk that there? What's your stop? What's your stop loss take profit?
Oh, yeah, shit. I forgot to set that shit up. The whole point of being a trader is to set up your risk properties. And in this case, my toe, you fuckwit. Jesus, got my toe.
It's 215.
Short on the bodies.
Can you wait for?
Short on the real bodies and say that's the previous high.
No, I'm Arab. I like taking risks.
Okay, that's Mohammed's. I'm gonna try and say that it's a buy. Okay, so I want to get rid of this this moving average because I don't think it's still meaning anything good. Yeah. Yeah, I'm sure he is. Ooh. Okay, actually.
Sorry, look, you guys selling?
All right, so this is so fucking hard. All right, this is going to be my analysis on why I think it's a buy.
What's your risk?
Oh right, yeah.
No, you're not allowed to wait. You've got to buy it then there.
One candle is not gonna hurt.
The whole point of waiting, the whole point of not waiting in these trades is so you can adapt.
Okay. All right. So this is going to be mine. Now, my initial idea for why I think this is going to be a buy.
Don't even try.
You go first.
Shut up. So the reason I think this is going to be a buy is because based on the VPSV strategy, once it breaks above that the previous point of control, it's going to be an obvious buy opportunity. I also think that based on previous supports, it's going to be a buy opportunity. And also a long-term support line there, which is Been very good.
You guys got the joke, you'll understand what that means.
So let's press play. Oh, 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 Daddy! Oh! Stop it!
You see? Oh.
Oh, you didn't do that. Okay, okay. Doesn't matter. I got it first. I won.
I got more.
That was not.
That goes
Oh.
That was pure luck, dude. Straight
Oh,
up.
100% it was.
Okay.
Okay.
My trade wasn't luck. Mine was
For
actually.
everyone on the buy opportunity, yeah, that was lucky. That was very, very lucky. Anyone that thought that was a buy, even just when I first looked at it, I said to Mohammed, I think it's going to be a sell. And then he decided to be a wanker and take sell, so I had to take buy. And that was
I forced him out of it. Okay, I
that was
forced him out of
hardly
it.
bullshit.
Okay.
So my original idea when I first looked at this was I thought
Very disappointing.
It's-
What were you selling?
looks like it's potentially overbought for where it should be. It's had a nice retest, but I think that's going to go down. If we're actually looking at this, 1, 2, 3, 4, so we know it should continue to drop if we follow Dow theory, as well as what the 100-day moving average, that there should have instantly told you that it was going to be a short because it was below that.
And not just that, another reason you would not have looked at buying is where's the champion at the back that said head and shoulders?
You said it first.
Okay, I'm gonna take the both of you because this guy said it and this guy said it. Okay, so the both of you are like one. Okay, just join bodies or something. I don't know.
You know what, actually?
Alright, so you guys,
Who-
good work.
Who said it? Who said it?
Who said head and shoulders?
Could both of you please come to the front, please?
Dude, why are you gonna embarrass him like that?
No, I'm going to get them to draw it up.
That's alright. Get the fuck to the front.
Or at least I want you to show me where you would have started. Put the first head, second head, and final. So I will get.
Well, if you guys
You
want it,
go first. So please draw it for me.
it was a good spot. Not gonna lie.
The tool for it is just right. There you go. And if it's the same as yours, then just say so.
So who said it was a buy, by the way, for this trade? Like, not like the guys who could buy. Oh, okay. You had to? Who said who had to? Oh, okay. Who else? There wasn't one guy on that line. All right, Adam, you guys. All right, sweet. You had a buy too?
Yeah, that's the same as yours. Okay, brilliant.
Perfect. Okay, that's a head and shoulders pattern. So that's another. I actually didn't spot this. So you guys.
Neither did I,
good on
actually.
you.
That was very good.
So that was-
so what do we know about this type of head and shoulders pattern? We know that once it finishes its right shoulder, it's going to go into a downtrend.
So
or
here's how
a
it
short
works. Okay.
opportunity.
So you've got the left shoulder here. You've got a head. Right shoulder too.
And then it goes down.
Then when he breaks the neckline, it goes down. Okay, that's how it works. I'm serious. That's the best way to simulate on a
Yeah,
person.
exactly, and that's exactly what's happened here. You've got the left shoulder, head, right shoulder, and then a nice downtrend there. So that is actually that's a very good spot.
Remember we used to simulate fractals with our fingers?
Yeah,
Go like that.
yeah, don't talk about it. Yeah, I remember that. So that's actually a very good spot. So those two people that got it, everyone that didn't get that, you should have. So we'll do another one. What asset should we pull up now?
No, commodities, please. Forex.
Come on. Forex or index? Come on.
Because I don't react the best to this, right? Because they're very important to my company.
Nah, we're doing Japan 225.
Give a currency paper. We're not doing Japan 2
Dollar
Swiss.
Dollar Swiss.
Dollar Swiss.
Nah, we're doing Japan 225. Come on, shit. Let's do one index.
No, dude, it's suicide.
Let's do one index.
Oh, I'm staying out of this.
Might sound like a dumb question. Does head and shoulders work the other way as well? Like if you.
It's inverse head and shoulders, yes.
Yeah, sure. Yeah, you can have it both ways.
It's basically looks like a crown. Okay, it looks like a crown. Except in this case, it's a princess. But it looks like a crown. So you just go like left shoulder, yeah, just basically invert it. And if you see the same sort of pattern to the downside, it's an uptrend.
Yeah, so you can have it like this. So in this situation, you go bang, 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 and then drop. This way, you go down, 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 then up.
They're powerful patterns. So they're quite.
Okay, so Mohammed, I'm actually going to ask you to take a position on this as well. 'Cause I love it when you do indexes. They're so funny.
This is where I lost 62 grand. So.
62.
Fuck you.
Okay.
But it doesn't have the Japanese one.
No, so it was funny. So I started with 800, went up to 60. I think it was 67.
60 something, yeah. Lost it all in a day. That was funny.
It was on Holland, the index of Holland, lost it all just like that. Okay, so it happens. Big losses there.
Yep. Done the same on the AUD USD. Oh, on the ASX 200.
I was crying. Oh my god, I was like, I lost 67 grand.
And then I'm like, yeah, I lost
Happens,
500,000. Anyway, so this is actually one of my favorite assets, the Japan 225. It is the top 225 companies in Japan summarized into an index. Risky to trade, yeah, but it's
beyond risk.
it's a bit of fun. So Mohammed and I will have a chat, break off into your groups, have a chat about an index. Even though it is an index, it behaves in a very similar way to Forex. All the indicators and methods that you've learned so far will still apply. The only thing that is different about indices is that they tend to jump a lot more than indexes do, than Forex does. So Mohammed and I will have a chat and get back to you.
Any questions, by the way?
Oh, does anyone want anything on there?
No, they can do themselves. Get up.
Oh, yeah, the laptop's there if you
Nah,
want.
I'm joking. Anyone want anything up on there? Huh?
No? Okay, that's
Okay, that's
fine.
good. Alright, what we're doing is head and shoulders. Oh, you're pulling out of this one.
Right at the end.
Yes.
No, it kind of does. There's the wrong
I'll bring up some analysis. Look, this needs
Can
like,
you zoom in?
this is gonna require some badass analysis. Oh, this is gonna require some big analysis. I'm gonna start off with super trend. Okay, so we've currently got a buyer reversal. Don't get excited. It's not always the case. Don't get excited, guys. Because the ultimate trend is down. Don't get excited. Okay? So be very careful with that. Bro, I've never traded indices before in a very long time. This is hard. Okay, so I'm just saying now, support resistance. I could see a support region.
They always move in hundreds of pips.
Actually, yeah, there's a support region.
There's no such thing as a small movement on an index.
Oh, there's no such thing. Can I show you something? Look at this pip. Cindy, watch. Just like half an inch is 22 pips.
Yeah, I remember
That's
one
400
day
pips.
Jacob was trading back to 25 and he's like, yeah, it's up 1,800 pips.
This is mental. This thing is fun.
Yeah, it jumps like anywhere between. So the reason I like the Japan 225 is because of how much it jumps.
'Cause you're
If
crazy.
you get it right, you can make more money in one session trading than you can on Forex in a week.
No, I'm gonna actually take a bite.
So if you get an uptrend,
You're gonna
an
want
uptrend will go between 500 to 1,000 pips. Whereas in Forex, an uptrend is 50 pips.
I'm going for 100 pips.
So 100. Yeah, see, 100 pips, that's a tiny movement.
That's my stop loss.
Let me move it a banana.
My wrist is fucking shit on this because you made me choose an index. Screw you. But this is dangerous. But this is my take profit zone. This is my take profit mark. Yeah. Any questions? I'm going for a buy. Jake, what are you doing? Sell?
I think it's a buy as well.
No, you have to sell.
No, I'm not. No, I'm not index.
Imagine
I
it goes
won't-
down.
I won't fuck around. So move and I'll do my bit of analysis. Does everyone have an opinion on, or do they want you to do mine? No. Do you want me to do? Oh, well, we're both taking buy. So
We'll choose between the two.
you'd have to disagree with us.
Will it work?
No, you have to disagree.
The VP model?
The BPBR?
100%. That's what I'm gonna throw on now.
So are there who's selling? Right side, buying, left side, or we can just not move at all?
So whenever I'll actually talk you through whenever I do an index. Whenever I do an index, the first thing I want to do is I want to grab an idea of what's actually going on in the oh, I need to actually change the asset. Sorry.
What happened?
I had to change the asset
Why?
because it was on FXCM. It needs to be on OLender.
Are you gonna go back to the other one?
Sure.
I just wanted to see if I got it right.
Yeah, it's the same. It's the same.
So
So
it's the same time, everything. You sure?
everything's pretty much the same. So what am I looking at here? What am I doing here? I'm gaining a general idea of what's actually going on within the market. So what I can see now is I can see right at this point, there's a lot of there's a lot of market activity.
Jacob, you're looking at it
Live
live.
data.
That's live data.
Oh shit!
That's what I'm saying. It's not the same. You have to go back to the other one.
Where? Oh, that was back. Oh well,
Oh.
Can I at least see if I
PC
won?
was a buy.
Mohammed, you were kind of right.
I
Yeah.
won. I didn't hit stop loss, but I
No, you didn't hit the stop loss. You were right. Okay, sorry.
Who won?
Okay, so we'll do another.
That's 3 wins in a row, by the way. But when you get to that level, you gotta
Thanks for pointing that out. Jesus, that would have been dangerous.
get to, you gotta work hard.
All right, so the first thing I want to do is I want to identify what's actually going on within the market.
I don't fucking know what's going on with the market when it comes to Japan to fight.
So immediately, this little point here catches my eye. The reason for that is because it is significantly larger than anything else on the LVT area. And it also has shown that it's picked up momentum. So intuitively for me, I'm looking at a short opportunity immediately. The next thing I want to do is I want to open up session volume. Why do I want to open up session volume? Because I want to try and identify what's going to be happening in terms of on the day. Now, this here is a little bit of a concern for me straight away. It's broken the previous day's control point. However, it's also yet to break through the 2 days ago's control point. So for me, I'm not too sure yet as to what position I should be taking. There's enough evidence for me to say that it could be a buy, but there's also some things telling me that it could be a short. So I need to throw in some other things. Now, can anyone tell me what I might want to put on that would help me identify what way or what direction this asset's going to move? Anyone? Starts with an M or McKinley's Dynamic. Now, why am I throwing on a McKinley's Dynamic specifically? McKinley's Dynamic takes into consideration velocity of an asset. Why would I want to know that? Because I want to see if there is enough energy in quotation marks, in the asset for it to be a proper buy opportunity.
Are you going for a buy this? Or sell?
Undetermined at the moment.
Zoom it out for this? Can I see it?
And then I'm also going to try setting that there to 100, just to see where it is. Okay.
Bring up a super trim.
Sure.
It's at the very top. No, it's already there. It's just not hiding.
Okay.
Okay.
So that's there.
I wouldn't do anything, bro. Things can solve it. No, man. Wouldn't do shit on this one.
Okay. And then there's a few other things that you could potentially throw in, like you could do...
Actually, no, it could be a seal. What the fuck is that? Looks like a snail. Dude, I'm going blind. You hypnotized me. Is that a black magic? Black magic?
So this here would be a very rough example of what I would do if I was to do an index. You'll learn everything here in the coming weeks. But just looking at this, I'm confident to say that I think that this is actually going to be a sell. The reason for it being a sell is to do a little bit with this resistance line here. It's yet to break the session volume up here, and I don't think it potentially will, as it's tried to do it twice here. As you can see, this could also be taken as a double top. So for me, I think that we might be actually able to see a sell opportunity. But however, indices move however they move, so we'll have to wait and see.
Is it a buy? What's supposed to sell? It's why I don't trade industry. Adam, you agree with me?
So, oh, actually, undo that. So, what happened here? We were looking at the market, what, here?
Yeah.
We lost, if you'd taken a buy opportunity on that, that is 1,025 pip loss.
You see why I don't trade industry?
On if you went on a short.
Doesn't seem like this is. Yeah?
Now, how would we have been able to identify that? As soon as it had broken above this green line here, we should have entered into a buy opportunity. The reason I didn't do that was because whenever we do this, we always do it with the data available. However, using the SV model, we can quite easily see that we would have entered into a buy immediately. So yes, why I wanted to pull up indices is because a lot of people have been asking me why I trade them. Oh, okay. They're just dancing. Why do I trade indices is because of stuff like that. They accelerate very quickly, they jump very quickly. As you saw, that 1,025 pips in 2-3 hours is insane. So Muhammad doesn't trade them because of that reason as well. It can go against you, as some of you just saw then, but it's just an asset for you to consider. Shall we do one more asset before we call it a day? Yeah, a currency pair?
Tell me something. I want to see what currency.
Yeah, go dollars, please.
Let's do, is that CHF?
Yeah, Swiss. This is what happened with the market last week. It was fucked because of the China war. Trump.
Trump wants to buy Greenland.
Who's following the news? Huh? Yeah, you guys following the news?
Okay, so we're going to go to December 1st, 2018. Here is the, oh my God. Here is the data. Tell me what you think.
Alright, buy, sell. Okay, if you want anything, come up, put it on.
If there's something that you want to put on, just yell it out. Let me know.
And I don't want to like actually decide to buy or sell like that's in the middle. I'm gonna do I'll do my analysis.
What do you reckon?
I have no idea, to be honest with you. I'll have to check. All right, so there is no Head and Shoulders in this. First of all, so sorry to the Head and Shoulders guys. Yeah, you guys are the experts now. There's no Head and Shoulders here. So this case we have. I don't know what the fuck we have here. What do we have? Okay, we've got some support. Okay, we definitely have a lot of selling pressure.
I'm just gonna say straight up. I think it's a sell.
Yeah, to sell. Yeah, I'm gonna say to sell.
Can anyone? Does anyone have? Wait, Mohammed, Mohammed, stop. Wait, does anyone have any idea as to why we think it's a sell? Resistance. That's one reason.
Is that a
Double top. Thank you.
Big red candles.
Big red candles. Big wing fat candles. Sensational. Anyone else?
Will this sway you off?
No. On settings.
No, settings don't matter. It's just the settings depend on the period. So in this case, you're looking at a medium-term sort of trades. So this case, it could sway some people off, could not. However, look at the trend. There is no double top. Who said there's a double top?
Someone said double top.
Who said double top? Champion. Where's your double top?
Like, just before the big candle drops, and then, like,
Here? That's not a double top.
No.
Whereabouts?
To the right.
when the price is going down.
There.
Oh, here you mean. Current price in here? Not enough confirmation yet. So double top is basically when it's kind of like an upside down M or it's an inverted M, basically. Sorry? Yeah, so this is what a double top looks like. I'm just going to draw it in, just so you guys... so basically it looks like this. It's like an M. When this zone here is broken, that's when it's a confirmed double top. Does that make sense? And vice versa the other way, double bottoms. Okay, there's a retest. And then when price breaks this level here, this region of resistance. Double bottom. Yeah, so this could actually be a double bottom. There's a retest on a higher time frame, and now we're breaking past it. So therefore, and that's where the super trend is complementing it that it's a buy.
Ooh, very
Great work,
spicy.
Mo. Very good work.
Very
Okay.
spicy.
So that's why be careful with those double tops and double bottoms. I actually think this is a buy, my personal opinion. Okay, I'm taking a buy on this. You want to take a sell?
Yeah, I'll take a sell.
All right, I'm taking a buy on this. Okay. My risk is going to be this. I mean, the super trend complements it. So if the super trend is complementing it to the previous level of support, just up to there. That's my settings. I really feel like I'm going to get stopped out on this trade. So I'm not 100% confident. Okay. So I'm taking a buy on this. What are you doing?
Yeah, about the same. But just opposite.
You want to buy?
Yeah, sure.
All right. So who's buying? Who's selling?
Does anyone want to see anything else out of the graph, or indicator, a trend line, or something?
Who's buying? Want to see on the left side, selling on the right side? I think they're getting tired of just moving around. That's what's going on. Tiring, though.
Did you want to see one of the VPs on it? Which one?
I think it's VR, not the, I don't understand what the session is, but I think the VR.
VR is orange.
Just send me what's happening. Buying, selling?
I'm trying to.
There you go.
Sorry?
Sell.
I'm buying this. So you guys all selling? Oh shit, everyone's selling.
Okay. Well, I want to. I want to see. I might be joining you, Mohammed. I just want to see something.
Might be doing me. What?
I said joining you, gay.
Thank you. Hey guys, what's happening?
I might wait for a few candles.
Okay. So you want? Should we wait a few candlesticks?
Okay, you know, we'll make it 4 candlesticks max. Wait, 4 candlesticks.
1,
2,
2.
3, and 4. So, what's happening, guys? Sorry, that's it. That's what you get 4 candles. It's actually, there's a lot of information on that. Just,
There is. Yeah.
there's actually quite some info on
All right. So I'm going to be joining the cell.
that. Running still side?
Yep. Because
Where's my risk on that though?
I don't know.
Oh, you deleted my risk.
Did I?
Yeah.
What a shame. So I also think that's going to be sell as it's failed to break that point of control. I think that's quite obvious.
Can you place my risk back?
Sure. Long position. Were you were long?
Yeah. And stop loss below the previous low. In the middle.
Still there.
No, lower than that. Below. Oh, Jesus Christ, I don't want to blow my account.
It's only 96 pips.
Alright, so my risk was there. My stop loss was here,
Yep.
there. And my take profit was previous level of support. And the super trend is telling me it's gonna buy. Alright, sweet.
All right. So, does anyone want to change? Even look at this one. This point of control. It's obvious. You know what? There's only one more thing. It's the fixed range. So this will be an example on how to place a fixed range. So I'm going to start here, and I'm going to drag it straight to there. Ooh. No, that doesn't really change my mind. I'm going to stay in a short.
So I see some people in the middle. What are you guys doing? Hey guys.
Okay.
Buying, selling, look, what's happening? Okay, you guys gotta know, okay, because we're giving you 10 grand each, you gotta decide whether you're buying or selling. You want to avoid the trade? No, you can't, unfortunately. You either buy or sell. Because this is a clear trade, this is an opportunity. Okay? There's no opportunity, I'll tell you about the trade. We're the experts, we're telling you there's a trade. What are you gonna do? You're gonna buy or you're gonna sell? Huh? See, I'm pressuring now, that's pressure the market. Could be a buy, couldn't it? Could also be a sell.
So, has everyone locked it in? You, what are you doing? Come on, man. Let's go. Let's go. Let's go.
Yeah.
Buy. Get over there.
That's pressure, see? Peer pressure.
You,
Social pressure.
Norm. Buy and go over there. All right. So, let's press play.
Oh, let's go. Thanks, I feel we're gonna get. Really feel like, come on. If that super trend turns around, I'm gonna. Oh shit. Yeah. Wait a second.
Thank you.
Bitch. Oh fuck. No.
Hey! Hey! Okay, so that was obviously a sell. We had 2 points of confirmation.
Actually, it wasn't obvious. It was consolidated.
It was obvious as fuck.
It was obvious after the big sell-off, not now.
It was obvious. That's why everyone was on that side of the room.
That one that's like because he convinced them.
That's because I'm good.
Because he's good at convincing. He's white.
All right. So even just looking at this, you can tell that it's going to be a sell opportunity. There are multiple amount of reasons. Even on the session volume trade, the session volume model, we saw that it hadn't been able to breach the previous POC. That shows that indicates quite a good amount of resistance. Even though our fixed one is POC is quite low, that there shouldn't be that much of a concern to us. Because at that time, it hadn't been able to break through this last point of resistance.
No, dude, let me use my indicator. I want to fuck you up in this.
No.
Let me fuck you up.
So if it had broken through, it would have just gone.
100%, yeah. So, example, potentially on this situation here, if we were trading here and this data was the same and it had been broken above, you should just assume that it would keep going. However, at this point in time, this data would be close back there. Dollars developed.
Are there any questions?
Does anyone else have any questions about what we spoke about today? Any questions in general? Because we do have some minutes left. If you have any anything that you want to ask.
I was probably gonna. I'll tell you in a second.
Cool. Thanks for coming today, guys.
Thank you, guys.
Enjoy the rest of your day, and we'll see you again next week.
What are we doing next week?
I don't know.